Oh, hello everyone, and welcome to this morning's Forex webinar for the London session. Good to have you join us today, and thank you for taking the time out for coming along to this session with David and myself. But as always, before we start, as you know, trading can be a very risky business, so please don't ever think of using money that you cannot afford to lose. Okay, very quickly, because there's all sorts of things been happening on the charts, and there's been some really nice VPA lessons on the pound Aussie, which I just want to go through. But before I do, for those of you who maybe this is your first time with us, we're going to be looking at the charts, obviously, and we're going to be using a methodology that we call volume price analysis, and it looks at the chart structure through the prism of price action, but also with volume. But there are three other elements that make up VPA. One of them is we use candles, candle patterns, and support and resistance, and that is absolutely fundamental and key to well, support and resistance is fundamental and key to all sorts of to technical analysis in general, but in VPA it's one of the key planks. We also look at the fundamental news, what's happening on that side, and we also look at related markets to give us an indication of sentiment, because as I've said before, currencies, certain currencies and currency pairs are either bought and sold to reflect the prevailing market sentiment. Sometimes Forex actually leads that sentiment, so you can get a divergence by, you might see something in the indices looks like risk on, but actually that is not being matched in what is in the Forex market, and often the Forex market can, is leading the way. But you have to understand these relationships. And what we've done to help us is we've developed a whole set of a suite of indicators and specialist tools for the Forex market that really breaks down the flows, if you like, into, first of all, the individual currencies with the currency strength indicator, and then we have the matrix, the array, and the heat map. And they all give us different information as to what is going on in the Forex market. And that information, how you use it, you either use it to find a potential trading opportunity, or if you are a trader that is focused on maybe a number of pairs, a restricted number of pairs, it tells you what has been happening to your particular pair, because this is, of course, this is a 24-hour market, but in reality, it is three separate markets. There is an overall open and close. Sunday evening our time, it opens in the Far East, and then it closes with New York on Friday. But within that 24-hour cycle, there are three very distinct time zones and financial centers, and they have a physical open and they have a physical close, and that is reflected in the flows. So you have flows into currencies on a global level, and you have flows into currencies because of on a local level, and that local level is usually in response to the fundamental news. And what you then have is you have these gray areas, which we call the session crossovers, where one is opening and one is closing, and they are absolutely classic times to trap traders on the wrong side. And the pound Aussie has just been a beautiful example of that, which we will come to in a second. Following on from the indicators, we've developed a specialist program, what we call the complete Forex trading program, which includes everything David and I believe you need to know as a trader to succeed. That program has now had an additional element, and that is it gives you the opportunity to test out, to practice this knowledge that you've developed, but not using your own money. You use our money, and it's what we call the funded Forex program. And the program is structured in such a way that you can go right up to have the opportunity to trade a $2 million account. I mean, of course, there's more to the program than that, but that is basically what it is. There have been some slight changes to the program, all good, and later on in the session, David will explain in more detail what those changes are. Just very, very quickly, these are the actual modules that make up the program itself. As you can see, hugely comprehensive, and we're absolutely thrilled and delighted. The students who have taken the program have used it as the foundation for their success in trading, in Forex trading, but actually, although it is primarily aimed at Forex, the principles and the concepts in the program you can apply to other markets. You know, the fundamental analysis module, as I said, it's from the perspective of currencies, but currency, the Forex market sits at the center of the financial markets. So, you know, if you know what currencies are doing, that can also help you with other instruments as well, relational analysis as well. And as I said, the technical analysis module is a huge deep dive into VPA. And of course, the most important module is probably the psychology of trading module, which is applicable to everything. Right, if you've got any questions, please don't hesitate to pop them into the chat box. If you want to share anything, just let us know and we will share it with the other attendees. We will answer any questions. We will either answer on air or we'll answer on the chat box. Right, first of all, just very quickly before we move to the chart, let's see what's happening today. Well, the most important item of news today is not till much later, which is of course the FOMC and the press conference. And now with Biden ensconced in the White House, Janet Yellen has actually been confirmed as a Treasury Secretary. Generally speaking, the markets are, what kind of mood are the markets in? This is where we always head to, is investing.com, just to see what the futures are up to. And it's well, they're all, you know, then they're neither here nor there. There's all this sort of wall of worry. I did there's an analysis on my personal blog at annacooling.com on sort of general markets sentiment at the moment. It focuses on the YM in particular, but you know, you can you know, it's sort of pick up what is the prevailing mood, as it were. Well, it's all a bit of a worry, and it's quite ironic, really. Pardon? It's very fragile. The word we use is very fragile. Of course, markets have had a tremendous run, the Nasdaq in particular, but it's quite ironic that when things are going well, and it's not just in markets. If you think of football teams at the top of a league, for example, here in the UK, we've had, you know, Liverpool has been knocked off, and now, you know, there's a new leader. I think Manchester United at the top of the league, but it doesn't matter whether it's soccer, football, or whatever. When they're at the top, they strive to get to the top. Worry starts to come in, nerves start to come in. You know, it's as if the success has this effect on performance, as it were. Whereas when you're at the bottom, what is the prevailing sentiment at the bottom? Well, it's hope. It's hope you hope your things are going to get better. And it's exactly the same in the market. So as we can see, that's the Dow, this is the S&P. You know, as I said, nothing terribly, you know, nothing to write home about. The VIX 23. It's neither here nor there. Certainly, if this starts to climb strongly, then we know we are going to be in for a severe correction, and that is going to be reflected in the currencies. So let's just see quickly the Nasdaq. So the Nasdaq tends to be tends to diverge. It's certainly been diverging for some time. That's because money has been pouring into the tech sector. Right, so financial juice, very quickly, picking up all the news on Forex Factory. What's interesting is they've also started to include key earnings for the day that are likely to move the markets. Now, clearly, Tesla, Facebook, and Apple, they're going to be after the aftermarket, so it's not going to have such an immediate impact. But we are in earnings season. We've got the FOMC. Is the Fed, you know, the markets are looking a bit fragile. Is Jay Powell going to come to the rescue and pour yet more money, you know, stimulus that will, you know, be taken up and push risk assets higher? So it's a bit like a soap opera today, isn't it? Don't you think so, David? All right. Getting back to the charts, before I move to the pound Aussie, I just want to remind those of you who come along regularly will know that I often refer to what we call Forex volatility, and that is, as traders, we really need to understand the pairs that we want to trade, even if you just want to take an opportunistic trade, as it were. It's always a good idea to have a look and see, well, as I said, the volatility of that pair, and by volatility is the amount it's likely to move, if you like, at a particular time, in a particular time frame, and even on a particular day, because it tells you whether any trade you're going to take, is it going to develop? Are you going to be able to take the pips in it? And one of the pairs that I particularly like, and it's just a pair that can deliver, not every day, obviously, so this is, you never know what's likely to happen on a day-to-day basis, but it gives you a good overall picture of what a pair is likely to deliver, and more importantly, at the time that it is likely to deliver. So basically, head over to investing.com, highlight the pair. This is the pound Aussie, and we can look at the daily volatility in pips. Now, what we also look for is a trend, as it were. So obviously we can see here at the beginning of January, it was delivering on average, daily well over 100 and 150, but you can see the volatility has been reducing. So that tells you that, big wide-ranging moves are probably going to be, harder to find. Volatility changes, this is not static, but it's just interesting. Even so, it's still over 100, generally 100 pips a day. If you compare that with something like a euro dollar or one of the other pairs, it's just interesting to have this comparison. So this is over 1 month. You can go over 3 months. You can go over, you can play about with the data. I mean, in some ways, trading, it's about data. It's about, we are almost data scientists, as it were. There's a lot of statistics involved, but alongside that, we do have to remember, trading is about emotion, it's about trader behavior. Then we look at the hourly volatility. What is the time in this 24-hour cycle when most of those, when you're going to capture most of those pips? And look what this is in. Obviously, you've got the Europe Open and you've got the London Open, clearly, because you've got an inrush of traders joining. But also look at the afternoon. As you can see here, you've got just before the London fix, which is at 4 o'clock, and as the pound recently has been behaving in quite an idiosyncratic way. Sometimes you get a sharp move in the morning, lots of trap moves, doesn't do very much, and then around the London fix, you do get a nice move. Bit unusual, but at least this site and this data will help you see that. So just head over occasionally just to keep an eye on things. And then here we have the weekly pips on which days. Thursday seems to be quite a good day, and Monday as well. Right, pound Aussie, very quickly. Now, what I've done, I've actually downloaded, I did it last night, an MT4 version. Those of you who come along know I tend to stick to MT5. I've got Ninja, and now I have Tradestation as well. But the reason I've put MT4 up is because, first of all, I know this is the platform that a lot of traders use, and it also gives me an opportunity to have the Renko chart with our Camarilla levels. If you remember, I said at the beginning that one of the key elements, of both technical analysis, but certainly of VPA, is support and resistance. And support and resistance are those levels on the chart that are important to other traders and to the market. And to the market, I mean the institutional traders, they're just important. And what we have to try and establish is where we have to identify them on the chart, because they are the points at which a move that is maybe underway is likely to pause, likely to reverse, or likely to break away from. The way we do it with our methodology is, first of all, we have as I said, we use price action, and we use candle patterns, candles, and volume, and we also use price-based, and we use volume-based. But I just want to look at the price-based ways that we use it as part of the quantum tools. We use, let me just bring this one up here. We use lines that are calculated based on price. The solid lines are thicker. The hatch lines are areas that are not so strong. They're slightly weaker, so price is likely to go through much more quickly, whereas on a solid line, it's been tested on more than one occasion, so the line is a little bit thicker. Unlike NinjaTrader, where these thick lines actually physically get bigger, we're not able to do that on the MetaQuote, so all you get is a solid line and a hatch line, whereas on NinjaTrader, you'll see that over David's side, these actually get thicker, and so you can, visually you can see how strong it is, and also it gives you a little number on the side which tells you how many times that has been tested. What we've also done is we have developed this indicator based on the Camarilla protocol, which is price-based, and it basically gives us, I can only describe it as a kind of hierarchy. It gives us 6 levels on the chart which are absolutely key, and at which price is potentially likely to pause or reverse. And one of the key levels is actually the 3rd level, which is the R3. And this morning, what happened with Pound Aussie is we had a confluence of everything that I was talking about. We had let's go back to the 5-minute chart here. We had a period of congestion, where we can see here, we know it's congestion, it's around the volume point of control. It's where a market is in balance. There is no firm, clear direction in either one way or the other. The market is happy to transact in a range, if you like, and the range, the price oscillates around what we call the VPOC, the volume point of control. This is actually support and resistance premised on volume. It's price and volume over time. Now, what happens is, the longer that stays in there, in this phase, this type of phase of price action, when you do get a breakout, a breakaway, what you want to see is lots of rising volume. This was actually at just before the Europe Open. We can see here we had a really nice break of this. Away it goes, nice volume accompanying it. The break was also captured on the Renko chart. That went higher from this, where are we? This point here, up we go here. So it was, we could see that on the Renko. In fact, let me just be a bit more accurate here, because I was looking at, there we are, where are we? There we are. That was congestion at 177.49. Let's be a bit more accurate. 177, let's see when 177.49 is. 177.49, 40, where are 177. I'm trying to find it in a minute. Hold on. 177.40. Let's take it from around here, as it were. So we've got the break also confirmed on the Renko. But the key point is this: reasonable, good volume, up it goes. And if we look at the hourly chart, just reduce that. No, I can't reduce that anymore. We're looking at this section of price action here. What happened was, in fact, it moved higher and it hit what we call the R3 on the Camarilla. Now, with the Camarilla, the way the Camarilla works, the way the calculation for the Camarilla works is basically this: on the time frames up to, but not including the hour, these values are calculated every 24 hours. They're updated every time there is rollover. On the hourly chart, they stay on the chart for 1 week. And the importance is that these levels are now in play for the rest of the week. So when we have this nice break higher, that we could see on the 5-minute chart, which was great. It was looking to deliver a really nice trade. It was approaching not only the R5 on the 15-minute chart, but this key third level on the hourly chart. And what that you can almost guarantee that when that happens and you're in a trade, you know it is going to pause. Sometimes it goes through, but it's going to need volume and it's going to need a lot of effort. But the first reaction is when it gets to this key level, particularly on a slower time frame, is you can expect a correction and a pullback. Now, what happened here was it also coincided with the open of the London session. What it posted on the 5-minute chart, it actually posted this 2-bar reversal. Now, of itself, a 2-bar reversal is a great signal for a potential reversal, and we could see that here. So you could argue, well, okay, I've had this little run up, it's been great, and I've got a 2-bar reversal coming in. I know it's hit the R3 on the hour. Lovely. I can come out of that and maybe look to a reversal trade here. And you would be perfectly within your rights to think that way. But because it came before, just as we were heading into the London session, this is what happens. You have this signal, you take it, you think great, everything has lined up exactly as you like, and then it looks like it's going lower, looks very nice, lots of volume coming in, and then bang. This is what happens. As soon as you get the open, you get the volatility coming in, you get prices being racked about all over the place, and you think, hey, why did that, what's all that about? And what is all that about is because you are caught in this kind of this rip tide that can happen in this crossover session. So it's something you really, really have to be aware of. Now, potentially, so what do you do? What we suggest is, first of all, be aware. Secondly, if you are in a trade and you've got pips, and even if it looks like it's going to carry on higher, do think twice, say, okay, and maybe take some off or take it off, because you can always go in again. What is slightly more, you have to be slightly more aware of, is that if you see what looks like a really nice potential setup for a reversal, just be aware of the time that reversal is coming in, because it may, on the surface, it may look like a great opportunity to take, but suddenly you could be completely, the ground could be cut away from under your feet because of the time that reversal is coming in. And it's not just at London, it's also going into New York. It is coming into, not so much coming into Europe. I haven't really seen it so much coming in, not to the volatility isn't quite as bad as when it comes in London, and certainly around the London fix. So that's the pound Aussie. The setup for this profile is, I've got a daily chart, and we can see here a pound Aussie had two sort of doji days yesterday and Monday, and it looks like it does want to go higher. So if you like, the dominant trend is still positive. The little pullback we're seeing is the wick to the top of that candle. I've got the hourly chart, as I said, set up with these very, very key levels that are in play for the week. And I also have the 15-minute chart here, as we can see here. If we overlay that onto there, it's not quite a 2-bar reversal, but if you overlay that candle over that candle, you would get an up candle with a very deep wick to the top. And I've got the 5-minute chart here, and I've got a Renko chart, onto which, with MT4, one of our traders very kindly told us, our students told me about this, I think he's in the room today, so on MT4 you can actually add the Camarilla level to the Renko. You cannot do it at the moment for MT5. So that's it. That's what I wanted to say on that one. Just very quickly, just see what's happening on the individual currencies and the currency pairs with the CSI. Let me just take off all of them for a second, and let's see what the pound Aussie is doing. Well, they look like they're kind of moving sideways on the 5 minute. Let's have a look at the 15. That's the selling. We've certainly got selling of the pound. So from looking for a potential trading opportunity, possibly it would best to go and have a look at another pound pair rather than the pound Aussie. This selling of the pound has come in, but against what? Well, you go and have possibly look at the matrix here. Where have we? Well, we've got cable. Cable's been moving lower. I don't know whether David's got cable on his dashboard at the moment, but there's certainly been some nice selling of the British pound. But as we can see here, they're kind of, the pound and the Aussie is sort of moving in the same direction. So we don't have that strong divergence that we want to see for a nice trade if we want to sell the British pound. And then by putting the other indicator, the other currencies back on the CSI, what else has actually been moving? As I said, this is just the 15-minute. Well, there's been some buying in the New Zealand, there's buying of the pound of the US dollar, and certainly some buying of the Swiss franc and the yen, which tells us, those are the two currencies tell us that sentiment, as we said here, certainly on the Dow futures and the S&P, not so happy. The Nasdaq is marching to its own beat at the moment. Right, I'll just pass over to David. Oh, sorry, David, do you want me to say about the about some matrix? Sorry, before I go, right, so very quickly. Right, this is a screenshot from TradingView. Those of you who have TradingView will know that until now, we haven't been able to develop all the indicators for TradingView. It's because until recently, the script that allows us to develop the indicators hasn't really been, it's just not been possible. Well, TradingView have upgraded what's called the Pine script, and that has actually meant that we can now offer all the quantum indicators for the platform. This is just a screenshot for the matrix, and which is absolutely great, which means that TradingView traders can have access to everything that is available for the other platforms. What it also means is that until now, we have sold the complete package of TradingView indicators, obviously for much less than for MT4 and Ninja, clearly because not all the indicators are available. But we have there's a benefit to buying our complete package, not just, as David said, there's a window of opportunity. If you invest in the complete package of any of our indicators, whenever we develop new indicators, they are added to the package for free. What that means for TradingView is that if you have the TradingView full package as it stands at the moment, or you're thinking of buying the TradingView package, when the additional indicators come on board, they will simply be added to your package. You don't actually have to pay us any more money. So that's a little benefit that you can take advantage of. As I said, if you have the TradingView full package, don't worry, these will be automatically added, so you don't, whatever you paid for us at the beginning, that's it. You don't have to pay us any more money. If you invest in it now, they will be added to the package, as I said. But once they are done and they are part of the package, the price will go up to reflect these additional indicators. And the development, this is just the first version. There is a further development and enhancement to the matrix, and that is, if you see these values that are given at the top and the bottom of the indicator, we've come up with a system which basically tells you whether that value is high, medium, or low. So if it's high, you're pretty certain that a reversal is on the cards. If it's low, it tells you that trend hasn't been, it's not been a fantastic trend. It's probably got a little way to go. And we do have we have some binary traders who only use this indicator because they simply look at they've kind of calculated in the time frames what is high, medium, or low. So they know that in the, let's say on the 5-minute chart, a value of say 15 is pretty high, and that can tell them that, hey, go and have a look at that pair, because there's a very high probability that there is going to be a reversal. And in fact, it was someone writing in and asking us, could we put some way of highlighting the fact that that value, whether at the top, at the bottom, where did it sit along the spectrum of high, medium, and low? So that's it. And of course, with TradingView, it's browser based, isn't it, David? It's browser based, so you can use it on not on can you use it on phones as well? You can use it on a phone as well, I must admit, which is absolutely great. Right, end of that. Let's pass over to David, and I will see what happens with a pound Aussie.
Thanks, darling, and a very warm welcome to you wherever you are in the world. Good to have you with us. Got a lot to get through, so I'll just move the chat box out of the way. There we go. I've even managed to remember to switch on my microphone, which is a minor miracle. Let me very quickly, I know we've got, let me move my microphone down a bit. I know we've got quite a few of our students in the room at the moment. I just want to very quickly run through the changes to the QT program. It is only available to our students, but if you want more information on it, you can find it here. You just click on that button and it will take you to the public page. You won't find the buy buttons there, but they are all inside the program if you're a student on the program. Very quickly, just to highlight the major changes, and really these have all been based on feedback we've had from students who are on the funding. As Anna said, it goes right the way through from 5, 10 or 15,000, that's the starting point, goes right the way through to 2 million. The biggest changes, I won't go through them all as I say, but the biggest changes predominantly all relate to the portfolio manager stage. In other words, once you've passed the evaluation stage, and the only change on the evaluation stage is we've removed the requirement to do 45 trades. So that is no longer a requirement. It's basically premised on, I think it's 30 days off the top of my head, forgive me if that's incorrect, but I'm pretty sure it is. It's a minimum active trading days of 30 on the evaluation stage. So there's no need to worry about the 45 minimum trades anymore. So that is no longer applicable. And this is also updated on the site. I've done a video for it for if you're a student, you'll find a video on the inside the education area, and all the PDFs are up to date, and obviously all the pages are up to date as well. That was all done last week. In terms of other changes, as I say, predominantly on the portfolio manager, I'm just checking to make sure I don't give you any false information. The lot exposure on evaluation still remains at 5:1, but once you move to portfolio manager, it increases to 6:1. So you have a greater risk exposure in terms of the maximum lots you can trade. Stop loss information remains pretty much the same at 1.5%. There is a minor change on something, but it's not that important. The other big changes are twofold. First of all, in terms of profit share, once you move to the portfolio manager stage, we're increasing that from 40% to 50%. So you get 50% returned to you in terms of what profits you make. And that's returned on a monthly basis. You don't have to take it, but it's your choice. And once you get up to the $1 million trader level, we increase the profit return to 60%. So it really becomes extremely significant at that level. So those are the changes there. The other major change is on the tradable assets. When you're on the evaluation stage, you are still limited to the 28 currency pairs. But once you come off that, we have then increased that, and I think I've got it down here somewhere. There we go. These are the other asset classes you can basically trade. So in a nutshell, we've now broadened it out to include indices, and you can also trade gold. And all of those changes have been brought about by the success of the program, from feedback from students who are on the program. Can we do this? Can we do that? And obviously we've listened to those comments and we've tried to incorporate as many as possible. We have increased the profit target percentage on the portfolio manager because we had to accommodate all these changes within that. So that's gone from 10% to 12.5%. But other than that, that's where it is. You start at the evaluation stage at 5, 10 or 15,000. Once you've passed that, you hit the profit target. We give you that as at a 35% kickback. You then move up to the next levels. We multiply your trading capital by 4. So if you start at 5, 10 or 15, that goes to 20, 40 or 60,000. And thereafter, every single level doubles. So if we start at 15, you go to 60, 60 go to 120, 120 to 240, and so on, up the ladder. It's very exciting. And as Anna said, the big difference is you are not trading your money, you are trading our money. There is no risk to you. You're not going to risk the capital. We have all the risk and money management rules in place. They are conservative, but as I've said many times before, it will first of all give you the confidence and the understanding of trading much larger account sizes, but also within this conservative rule set. And it is very much the rule set, and I'll pull this over in a minute, that I apply to the little FXCM account we've got on TradingView. And I'll go through that. I've got a lot of other things I want to cover as well, because we've had quite a few emails this week, and I know one of the questions was, can we look at slower timeframes? And I will promise to do that at some point. If we start with, I've got 3 platforms running. I've got NinjaTrader, Tradestation here, and I've got TradingView over on the other side, and there is quite a lot going on. What I wanted to highlight here, I've actually, I've rejigged this particular profile so that hopefully it's much easier for you to see. It's not so busy. This is the currency futures, and basically what I've done, and Anna's done the same on her radar screen as well. We've increased the font size dramatically, so you can actually see the numbers rather than probably last week. They were a little bit small. This is on the currency futures. So here I've got the 6A, which is Aussie dollar. I've got the 6B, which is pound dollar. I've got the 6C, which is CAD dollar. I've got the 6E, which is euro dollar. I've got the 6N, which is New Zealand dollar. And over on, I couldn't fit this on, over on the right-hand side here, I've got Swiss dollar. Remember, on futures, what we're looking at is a pure view of the US dollar, because what this gives you, and these are all the time frames exactly the same on each, so 1, 3, 5, 10, and 15, so they're all laid out in exactly the same manner. And what I've got on here, I've got the trend monitor with the quantum trends alongside. So we've got basically the trend dots in this column. We've got the trend monitor itself in this column. This is actually the trend line, in other words, yellow line. I haven't got it on at the moment. We're in relation to the midpoint. And then over on the right-hand side, we've got the dynamic volatility on here. But there are many other indicators that we've also programmed for the radar screen, which you can add. Now, this is 9.5. So what you're looking at here is Tradestation Global. This is driven, the data here is being driven by my interactive account, or one of the interactive accounts that we use. So that is what is as linked. It's this partnership between interactive and Tradestation. It runs on 9.5. It's very powerful. I haven't got the live trading enabled. Well, I have got it enabled. I haven't got it up at the moment. But it's very easy to do, and you can trade straight through the screen. It's very straightforward and pretty intuitive, as you would expect. But the reason I wanted to show you this is really that what the trend monitor does when you're looking at this particular array across this sort of time horizon is it gives you an instant view of what is going on in terms of the dollar. Is the dollar being bought? Is the dollar being sold? And what you're looking for is, actually, the 6B is probably a good example, because like any trend reversal, and you can see it over here on the right-hand side, this is on 5 minutes. So we've had this, this is 8 o'clock here. I'll just, in fact, let me pop this up full size, make it easier on the eye. There we go. As with NinjaTrader, this prints in real time, so it give you your local time as to what is going on. This was 7:45. We had this spike, nice volatility trigger. Then we have lots more volatility as we come into the London Open here at 8 o'clock. Very light volume here. This is, suspicious volume here. Lots of volatility, lots of racking about. There's a huge amount of volatility. You just have to wait and be patient for all this to settle. Trend monitor goes into the downwards. Now the trend dots are reverting and they're starting to transition and come out the other side into a different color. And that's what you will see across the radar screen here in terms of what is going on from my fastest time frame, which is 1 minute here. And if this is going to develop into anything meaningful, and let's face it, it probably isn't, because we've got the volume point of control sat here. So all we're expecting this to do is literally just go reverse back up and congest once again, as it's done here around the volume point of control. But what you're looking for constantly on the radar screen is, this is why it's so powerful, is the development of the trend, which is always going to start in your fastest time frame and then gradually transition through to your slower time frame. So what you're looking for is a change in trends. Is the change in trends confirmed with the trend monitor? It's starting to transition here. Is it going to change on the trend monitor? And you do that all the way down. You can have this on any time frame, of course. And of course, the other beauty with this, doesn't click on any of these. And because I've got these symbol linked and also interval linked, it automatically updates me over here in terms of the chart. So I can whiz through these pretty quickly. If I go down onto the CAD, for example, click on any of these, that's what's going on in terms of the CAD. We had this, it's a better trade. Why? Because the trend monitor throughout is bright red, as are the trend dots, which is what we expect to see. You can see it here. We had exactly the same process of volatility. This was 8 o'clock. Then we had the volatility spike, and now we've got the reversal. Nice trap move. The trend monitor is remaining red for that particular pair. We're getting down into low volume on the volume point of control, so we need to step up and go and look at a slower time frame. So you go from there, you go up onto the 10-minute, pulls it up straight away. That's the 10-minute chart, and go up onto the 15. Similar picture there. It is such a powerful platform, and even more so on TradeStation Securities, which is version 10 and above, where that is being driven by the TradeStation data feed itself and not through Interactive Brokers. And the primary difference is that you can have up to 1,000 cells on radar screen on TradeStation 10 and above. On 9.5, at the moment, it is limited to 400 cells, which is still pretty powerful. But this is a very simple application of radar screen, purely based on currency futures. This move is developing nicely. All red, every cell in there is red. Nice move to the downside. And the other thing with it, as you say, you can see on the right-hand side here, we've got the quantum dynamic volatility here. So this gives you an immediate view on what is going on. When was my last volatility trigger? If we go down to the 6E here, apparently there was one 3 bars ago. There we go, it's up here, you can see it there. Didn't really tell us a great deal, because we had this long-legged doji volatility candle. What we really want are these sorts of guys where it's pretty demonstrable, ton of volume coming in, what's happening. Absolutely loads of buying in there. We've got a nice deep wick to the lower body. That's a really nice recovery. You can imagine the number of traders jumping into that particular candle, getting absolutely caught short, and then they're just taken out, or they get out, one or the other. It's as simple as that. It's so powerful, and having it on radar screen, you don't have to have hundreds of charts. That's the beauty of radar screen. You just set them up in whichever way you like, whatever time frames you choose. As you can see, you can have multiple time frames here. You can have whatever arrangements of and you can mix instruments if you will. I think last week I had the instruments aligned. Now I've got it down to instrument specific on each radar screen. But it's such a powerful application. Got the CSI running over here on 3 minutes at the moment, and you've seen that many times before, I'm sure. And that's on the not the Swiss franc. This is the Swiss dollar. It's always inverted. It's not dollar Swiss, it's Swiss dollar. And I've got the Camarilla levels on that particular time frame at 15. You can see it's just breaking through the S3. Where are we expecting to go? Possibly down to the S4 would be the next stopping point, next pause point for that particular move. So that's where we are on Tradestation. Let me just pull over the little trading view account we've got running here. One of the questions that we get asked a lot, and we were asked, we had a couple of emails about it this week, is can you show me what you do and how you do it? And to try and answer that question, first of all, it's so important that you understand that what I do or what Anna does, I don't do the same things that Anna does, believe it or not. We trade in different ways. And really, I suppose that makes the point more forcibly than anything else. You might think that we trade exactly the same way, the same styles, etc. We don't. There are some reasons for that, but the largest reason for that is probably to do with personality. We are very different characters, personality-wise, and the key to this, and I'm trying to think of analogies that you might think of. I can think of sporting ones. I'm a great cricket fan, and one of the opening batsmen for the England team was struggling against the spin in Sri Lanka, and he obviously went away and he developed a technique which helped him to manage that. Now, the England captain clearly has sorted that out himself because he's made a double 100 and 180 the following game. But for this guy, he was struggling, so he had to go away and find something that worked for him. And that's what this business is about. It is about finding something that works for you. I can tell you what we do on this account, just to give you some idea. There it is. Haven't done a lot, to be honest, since last week. I think we've added about $3 or $4, something like that. So it's about 40 pips. Overall, we're about getting on towards 1,000 pips overall, $100 up since we started. And all I can tell you on this account is all that I do is trade much slower time frames. This is on the hour. This is the hourly CSI. So that's the first point. It's much slower time frames. Secondly, all I'm looking for with this account is one tactic. The strategy of trading is to make money. That's your strategy. You then have to define and decide what tactical approach you are going to take to market. Am I going to trade reversals? Do I have the patience to trade reversals? Am I a trend trader? Am I more suited to jumping in and out of trades, grabbing a few pips here and there and trading several, multiple times a day? Is that me? Do I have the time to do that? If I don't have the time to do that, then that will automatically define what you can and cannot do. If you're not in front of a screen all day, you can't take that approach. Am I more comfortable putting limit orders on? Do I prefer trading market orders? Do I like breakaway trading? Am I quite happy to sit through congestion and then look for those opportunities as it breaks away? This is what you have to find. Do I trade all pairs? Am I going to restrict myself to 2 or 3? Am I going to become an expert in 2 or 3 trades and that's all I trade? Am I going to trade what particular time of the day am I going to trade? What time of day do I have available to trading? When is the deepest liquidity? Is that available to me? We are very privileged in the Northern Hemisphere. We have all the deepest liquidity times. We have London Open, we have the US Open, we have all the markets available and we get to sleep. Not so easy if you're in the Southern Hemisphere. So we are very privileged in that respect. So in terms of what I do here, it's very straightforward and very, very simple. All I'm looking at is maybe on the hour or the 30-minute CSI. The first thing I'm looking at is for overbought and oversold because I'm just trading reversals on here. Nothing else. I'm not interested in trading trends. If I've missed it, I missed this yesterday because I was busy doing something else. Fine, it's come and gone. Hey ho, there'll be another one along next day. That's all I'm looking for. I'm looking at the tops and bottoms. I'm looking for reversal opportunities. I'm looking at this right now. What am I seeing? I'm not really interested in anything at the moment because, yeah, the pound's up here. It's probably going to get up into overbought, but there's really nothing to match it at the moment down in oversold. So I'm really not that fussed. I'll trade a maximum of maybe 4 or 5 positions maximum on this account. So I'm effectively trading what you will be trading in the funded account. In other words, something like 5-to-1 leverage, no more. In terms of stop losses, I'll probably be looking at quite wide, somewhere in the 50 to 60 pip region, something like that. And these trades will be running for several hours and probably overnight, and certainly over weekends if I think there's a reasonable opportunity that you know, it's not high risk to leave them over that long. If I get to a Friday and I find that, you know, I'm not too keen on it, then I'll just close them out and reopen them again on Monday if that's the case. So that's really, that's what I do with this account. It's not sophisticated. It's very, very simple. It's very basic. It's tailored to one specific approach, a tactical approach, and nothing else. I'm not interested in trends. I'm not interested in scalping on here. It's just trading over a much slower time frame with a much wider stop loss and very limited leverage risk. Simple as that. When I look at the CSI, the pairs of the currencies that I'm always looking at are, first of all, the commodity currencies. I'm always looking at the New Zealand dollar, the Canadian dollar, and the Aussie dollar. Those are my three go-to pairs for risk on, and my go-to currencies for risk off are the yen, the dollar, and the Swiss franc. If I see a situation setting up where I have those three currencies, these three currencies are at the bottom or the top, and they start moving in lockstep, happy days, particularly if it's counterbalanced with these three guys, the New Zealand, the CAD, and the Aussie at the other end. Because what that's telling me is it's all about risk. This business is about risk. It's not about anything else. It's about risk on, risk off. Are the markets in risk on mood or are they in risk off mood? And that is reflected across whatever asset class you care to name, whether it's in commodities, whether it's in currencies, whether it's in equities, or whether it's in bonds. There is nothing else to this business. It's just trying to figure out what is the mood of the market right now? Is it risk on, risk off, and how is that reflected across the markets? I mean, I've got this is the UK 100. Let's pop that up full size. There we go. This was the open, 8 o'clock, classic plunge move. Trapped a load of traders thinking it was all going short, bad news, volatility trigger, and you know, we're back up to where we started more or less. So, you know, don't think that this is purely restricted. The risk aspect is not just restricted. This is the UK. Obviously, we're in the UK, but I can assure you it's exactly the same profile on the US indices on Globex, which are not trading. These are cash markets trading. They are not trading cash. The other chart I've got up here is obviously the dollar. Give us a heads up on what's happening in the dollar. The other reason that I'm not particularly comfortable at the moment is because what we're seeing is we're seeing dollar buying and we're seeing markets rising. So we've got this market rising and we've got this market rising. What is that telling us? Well, it's telling us the two are going up together. I'm not saying that the inverse dollar relationship with equities is perfect. It never is. No relationship is ever perfect in that respect. But we've got dollar buying, we've got yen buying, which is telling us that you know, this is not a risk on market. You know, markets are nervous. We've got the FOMC later, etc., etc. So at the moment, what I'm seeing is dollar buying. I've got the equities rising here. I'll pull up Ninja in a moment. In terms of a risk currency pair, what is going on in terms of Aussie yen? It's kind of what you would expect to see. It's all a bit labored. You would expect, if this is going to be a dramatic reversal, then you expect to see this selling off quite sharply. It isn't. We've even got some buying coming in under that. Just to expand this up a little bit if I can. Sorry, let's just use that one. Use the right button. There we go. A little bit of buying coming in under that last candle, but probably not enough to change the current trend at the moment, which is bearish. But it's not bearish with any great degree of momentum. So that's on TradingView, and I'll keep you posted on that account. But you know, it's, as I said when we started this little exercise, if I said to you at the start of the year, I can show you how to make $100 a year, you wouldn't be very interested. But if I said to you, I can show you how to make 1,000 pips a year, you might be interested, because 1,000 pips on a full leveraged account is an awful lot of money. And that's the difference, because when you start, it's not about the money. It is about finding consistency and finding what works for you, not for me, not for Anna, but finding what works for you. You have to find that, I don't know how to describe it, that nugget, if you will, that unlocks the door, that gives you that consistency, but you have to search for it in applying the methodology, the VPM methodology, the indicators, but then finding what suits you. Not me, not Anna, but you. Let's just, let me just drop that one out of the way. That's Tradestation. There we go. Okay, now we're over on NinjaTrader. Dollar's still rising. This is on the three indices, the YM, the NQ, and the ES. You can see what went on yesterday. Dojis, the NQ was trying to rally. It's even gapped up this morning, which is extraordinary. And this is the ES flatlining. This is the London Open. Here we go. As I said, exactly the same profile as we saw on the FTSE 100. Plunge at the open, tons of volume coming in, nice trap move. You know, and we've even got more volatility here as well. Let's head over onto the currency charts. Currency pairs, multiple time frames. There we go. This is what we're seeing on Aussie yen, which we saw over there. It's modest, it's mild, it's not particularly strong. Let me just pull this up because I promised to look at the slower time frames. In terms of looking at the chart, it really doesn't matter what time frame you're considering. This could be a minute chart, or it could be, as it is here, a daily chart. The principles are exactly the same. The indicators work in exactly the same way. It doesn't matter whether you're looking at a CSI or a currency matrix, or I'll go to the heat map in a moment, or indeed at volume. It all works in the same way. And what's interesting about this chart is really this phase of price action. I've mentioned this type of price action before. And also when you align it with the volume here, and if you go through these four candles, okay, the first one looks fine. The second day we get, 1.5 times volume, but the price spread is the same as the previous day. So what is that telling you? What it's telling you loud and clear is that there's an awful lot more effort going in for no extra reward. It's the analogy of the car driving up an icy mountain. The road is very slippery. You're applying more gas to the accelerator, and gradually you will get to a point where the car will come to a complete stop. It slows down and it comes to a stop because you're just going nowhere. The wheels are spinning, basically. And that is the analogy. So you've got 1.5 times volume with no change in spread. So more effort, but the same result. You then get more volume here than the first day. So on day 3, our volume is higher than day 1, and the spread is even narrower. So again, it's just confirming the fact that this is a fragile, weak market. This is not a strong market. And then on day 4, we get higher volume here than the previous day, and even less result. We end up with a little spinning top doji. And the other point about this this type of price action is that you can see it here. I mean, the spreads are just narrowing. So we've got lots of volume going in, but narrowing spreads. It's that arching of price action, that what I call a catenary curve of price action. We then go into the congestion phase, piano keys back and forth, bearish engulfing on that one. Market tries to rally. Again, you know, similar sort of process. We've got 3 bars of equal volume here, tries to rally. Spreads narrowing again. You know, this is not looking particularly strong right now. There's certainly no evidence of strong buying, indecision, tried to rally. Yes, came off the lows again, and on we go. Pivots to the upside. Trend monitors transitioned a bit, come back into bullish, so it's still maintaining a bullish perspective. But that's on the daily chart, and the analysis would be, well, you know, what am I going to look for if I was going to trade this on a daily basis? Well, you would set your levels. You'd maybe look at something down at this level at 79.5, maybe 81 to the upside. You'd be looking at this on different time frames as well. Maybe go up to the weekly, have a look on the monthly, whatever your time frame may be. Set your levels in place. As I say, you might even put limit orders in if you wish. I don't trade limit orders. Anna doesn't trade limit orders. We always trade market orders, but that's purely because we are sitting in front of the screen. We're not traveling. We're not trading off, you know, mobiles and what have you. We are here all day long, and therefore, when we've made a decision, we just get in. That's it. Simple as that. So I hope that gives you a flavor of the difference between or what indeed, if there are any differences between slower time frames. Let me just go and have a look at the heat map, just to reinforce that. The heat map is, of all the indicators we developed, the heat map is one which really looks at the slower time frames, if you will. It gives you instant view of intraday from the 1 minute right the way through to the month. So you have a 250, 280 odd window on what is going on in every single cell, bullish, bearish, close to bullish, close to bear. Where are we in the fulcrum? What is going on? Is this bearish sentiment right now? Is this moving out into the slower time frames, etc., etc.? So not only does it gives you two perspectives. Firstly, from a scalping intraday perspective, but from a much slower term perspective, from a trading over dailies and weeks. You've then got the ranking ladder down here. Now, this ranking ladder does not move at the same speed you would find on the currency matrix because it's weighted, and it's weighted according to time frame. You would not expect a 1 minute change in sentiment to be reflected in as strongly as something in a 1 hour. And that's what we've done in the algorithm. We've basically weighted this ranking here so that when these appear on the ladder, they are weighted according to the sentiment across the cells, heavier on the monthly, much, much less significant on the minute. And when these start to move, they will move intraday. They might move only one slot. And over a period of days, they'll maybe move 3 or 4 slots. And over a period of a week, they might move all the way from the top down to the bottom and vice versa, bottom to top. So what you're looking at here is really two facets: intraday, much longer term. So these will move over a matter of days. And again, if I'm trading on that sort of time frame, what I'm looking at is a reversal trading, basically from the tops and bottoms, to look at it over a slower time horizon. So I just wanted to highlight that. We don't show the heat map enough. It's great for intraday trading, but bear in mind, if you're out and about, you're at work, do check in on the heat map to see what is going on in terms of the ranking ladder. You can see at the moment, if I isolate out on the dollar, let's see what the dollar's doing. Okay, these guys are setting up at the bottom. These guys are probably tracking up to the top here. So there's a lot of dollar opportunity there setting up on a slower time horizon. Just going to pause there. Sorry, I've been going full flow. I haven't answered any questions. Okay, we're good to go. They're fine. Okay. Just going to switch off for a moment, just see if Anna wants to chop in with anything. No, we're okay. Finally, I'm just going to wrap up, but let's just head back onto Trading View again. This is what's going on in the dollar. That's where the move is. It's strong. The UK 100's come to a pause point at the top of the candle there. This is what we're seeing dollar buying here. If it was down here and we had some other currencies up here, then I would be interested. I'm not interested at the moment on this particular account because this is long gone for me. The train's left the station about half an hour ago, so I'm not interested. So I just sit and wait. Maybe the euro will set up later and come down here somewhere. Maybe the commodity currencies are going to decline further, but it's all against the background of the FOMC later, which may well dictate what we see ultimately throughout the entire trading session. Right, there we go. Let's head back up on here. That's the Quantum Trading Education Program. We've done the funding there. And you can find that on quantumtradingeducation.com. As I say, I stress it all the time. The funding is only available to our students. It's not available for general public, but if you are a student, you're more than welcome to join. It is an option. You don't have to join the program, but it is an option for you. You'll find all the posts here that Anna's done at annacooling.com, all the books up there. You'll find them on Amazon. I have to say, we're absolutely delighted. We had an email in this morning from one of our Vietnamese publishers who's literally just launched the VPA book in Vietnamese. And they are absolutely thrilled because they've sold 1,000 copies in the first, I think it's 2 weeks it's been out now. So they're absolutely delighted. And that came in this morning. So we are very proud of that and very humbled by it as well. So, and we've got another Vietnamese publisher who's taken on the stock trading book, and that's going to be launched in the next couple of months as well. Finally, where you find all the indicators, they are here at quantumtrading.com, MT45, NinjaTrader 78, TradingView and TradeStation. two versions of TradeStation now, the 9.5 I showed you earlier, and we'll show you the 10, which will focus on stocks on Anna's machine later on in the day. So you can find all the indicators there. And as Anna said, if you buy the full package, then you get all future indicators we develop free of charge. That's it. Nope, that's good. Okay, thank you very much indeed for coming along today. Hope you've enjoyed it. Hope you found it useful. We will be back at what time are we back? 2:15, I think. I believe it's 2:15 for the US futures session, and then 3:15, don't quote me on that, but I think it's 3 on stocks. So we will see you later. Enjoy the rest of the trading day. Watch out for the FOMC later. And thanks indeed for coming along today. Hope you've enjoyed it, and we will see you later. And if not, enjoy the rest of the trading day. Thanks ever so much. Bye for now.